Welcome to our video on understanding the psychology of fear and greed in trading. As traders, it's important to be aware of how these emotions can affect our decision-making and to develop strategies to manage them. In this video, we will explore the ways in which fear and greed can manifest in trading, as well as strategies for overcoming them. First, let's talk about fear. Fear can manifest in a number of ways in trading, such as fear of losing money, fear of missing out on a big move, or fear of making a mistake. These fears can lead to missed opportunities or hasty exit from positions. It's important to recognize that fear is a natural response, and it's not necessarily a bad thing. The key is to manage it and use it to our advantage. One strategy for managing fear is to have a clear and well-defined trading plan, including rules for entering and exiting trades. This can help to prevent impulsive decisions based on fear. Additionally, keeping a trading journal can help to identify patterns in our behavior and emotional responses to different situations. Another strategy for managing fear is to focus on the process, rather than the outcome. This means focusing on the mechanics of executing your trading plan, rather than worrying about whether you will make money or not. By focusing on the process, we can reduce the impact of fear on our decision-making. Also, using stop-loss orders can help to prevent large losses and reduce the fear of losing money. And it's also important to manage expectations. Unrealistic expectations can lead to disappointment and frustration, which can then lead to fear. By setting realistic expectations and not putting too much pressure on ourselves, we can reduce the impact of fear on our decision-making. Now let's talk about greed. Greed is the excessive desire to acquire wealth, power, or status. In trading, greed can manifest as the desire to make a quick profit or to hold onto a losing position in the hopes of it turning around. This can lead to taking on excessive risk, or not cutting losses when we should. To manage greed, it's important to have a clear understanding of our risk tolerance and to stick to it. Additionally, setting profit targets and trailing stops can help to take emotion out of the equation and ensure we lock in profits. Another way to manage greed is by developing a sense of patience. Greed can often lead to impulsive and hasty decisions. By developing patience, we can allow more time for our trades to develop and reduce the likelihood of making impulsive decisions based on greed. Also, diversifying your portfolio can help to reduce the impact of individual stock movements on your overall portfolio, which can help to reduce the urge to make impulsive decisions based on greed. Another important strategy to manage greed is to have a clear understanding of our goals and to stay focused on them. Instead of trying to make a quick profit, it's important to have a long-term perspective and to focus on our overall financial goals. This can help us to stay grounded and avoid making impulsive decisions based on greed. It's also important to be aware of the market cycle and the role that fear and greed play in it. The markets tend to move from fear to greed and vice versa. Understanding this dynamic can help traders to act accordingly. When the market is in a state of fear, traders may become too risk-averse and miss out on opportunities. However, when the market is in a state of greed, traders may take on too much risk and not lock in profits. By understanding the market's mood, traders can avoid buying at tops and selling at bottoms. Lastly, it's important to remember that managing fear and greed is an ongoing process. It's not something that can be achieved overnight, and it requires continuous effort and self-reflection. By developing strategies for managing these emotions and continually working to improve our understanding of ourselves and the markets, we can increase our chances of success in trading. In conclusion, fear and greed are inherent parts of human nature, and as traders, it's important to be aware of how they may be impacting our decision-making. By developing strategies for managing these emotions, such as having a clear and well-defined trading plan, setting profit targets, diversifying our portfolio, managing our expectations, staying focused on our goals, and understanding the market cycle, we can increase our chances of success in trading. Remember that managing fear and greed is an ongoing process that requires self-awareness, self-reflection, and discipline. Thank you for watching. If you have any other question or topic you want us to cover, please let us know in the comments. Don't forget to like and subscribe for more trading-related content. Thanks for watching.